Good morning. Good morning. There we go. Episode 150. Gee whiz. Can't believe it. It was the 20th of March when the first one went live. The first 75 days flew by because we did an episode every single day. Now it's going a little bit slower because we are doing one episode a week every Friday morning at 7 a.m. live. But still, I think the show has evolved. We've progressed. We've had fantastic guests. We have grown the subscriber base. We have really so thankful for everything. And I don't know, looking forward to the next 150, I assume, which is going to take about another 3 years to achieve, which is crazy. We'll have to make a plan. So, but with that, good morning. Thank you so much for joining us live on this beautiful Friday morning here in Joburg. And today I'm talking to Bjorn Ladewig. He is from Just SA, but his passion is annuities. And we're going to be talking about the latest innovation in annuities and how to make annuities sexy again, and what is happening, and just some insights and amazing things that we should be thinking about when helping clients decide when they get to retirement about their different income options and what they're going to do. So really looking forward to this. I've never spoken to Bjorn before, except in the week when we caught up for this. But apart from that, really excited to get to know him better and also to learn from him this morning. So a warm welcome to him. Of course, we always have the news. Today, Mr. David Kopp is with us, and looking forward to hear what's been in the news this week, because I haven't been able to listen and see what's going on in the news. So looking forward to that. And then Norma is going to talk about what people think and why that sometimes get to us, I guess. So, with that, let me say just a very quick good morning before I get into the show. Ben Kleinhans, goeiemorgen, Ben. Julie, goeiemorgen, good morning. Nice to see you as well. Tinus Brits, goeiemorgen. Wayne, my maat, goeiemorgen. En dan Jaco, Jaco, thanks for getting me in touch with Bjorn. I appreciate it. Razan, good morning, goeiemorgen. Joseph, goeiemorgen, good morning. Wow, dis weer 'n rukkie. Ek hoop dit gaan goed daar en welkom. En so there we go. So let me see quickly. Good morning, Linda. We've got Herman, Adrian, good morning. I've got Albert Fritz, good morning. Jaco Ritz, and of course, Mrs. Lalani Besaidenhout, good morning. All right, and I don't want to continue for the rest of the show saying hi. So good morning. If you joined a little bit late and you're seeing this now, good morning. And with that, let's get into the news and head on over to the news studio, and where Mr. David Kopp is waiting with the latest news.
Good morning, everyone, and welcome to this edition of the Friday News with the Financial Planning Institute. And yes, we have a date, not you and me, but all of South Africa. So the 1st of November is a date set for South Africa to hit the polls and elect the leadership for the 257 municipalities around the country. The announcement came after the IEC's application to postpone the elections was actually refused by the Constitutional Court. So why are municipal elections important? Well, if we look at the latest report from the Auditor General with regards to municipalities, it paints a picture of billions of rands of funds allocated to municipalities being spent in undesirable practices. So it's really important that we elect the right leadership to ensure that our municipalities can continue and to spend the taxes and rates that we pay to them wisely. Then Viceroy, Shane, they're looking for 50 million rand because the Financial Sector Conduct Authority has imposed an administrative penalty on Viceroy and the partners, Mr. Adrian Lau, Mr. Fraser John Perring, and Mr. Gabriel Bernardi, in terms of 167(1)(a) of the Financial Sector Regulation Act. The penalty is jointly imposed and is jointly and severally payable within the next 30 days. So the FSCA found that the respondents had contravened Section 81(1) of the Financial Markets Act during January 2018, as they published false and misleading information relating to Capitec, which they ought to reasonably have known was not true. So Mr. Unati Kamlana explained the penalty is particularly significant because it shows how far the FMA reaches. Although the Viceroy Research Partnership and its partners are not financial institutions and are domiciled in a different jurisdiction, their comments about South African listed securities make them subject to stipulations of the Act. The penalty also makes it clear that breaching our financial sector laws has serious consequences. It has been reported that Viceroy will be appealing this, so it will be interesting to see where the story goes. So first cigarettes and then booze. Okay, so a while back we reported on the destruction of illegal cigarettes, and now the South African Revenue Services, together with the South African Police Services, in support of the liquor industry, have uncovered a warehouse in Mpumalanga where duty-free liquor to the value of 15 million rand is being recycled back onto the market. So more than 12,700 cases of duty-free liquor were found at the scene and seized following a year-long investigation. They found equipment to alter the original products. The bottles and the boxes in which they are transported have labels indicating that the product is duty-free and therefore destined for the foreign market. However, the smugglers of these products remove these labels from the bottles and replace them, in some cases even replacing the bottles. Edward Kisweter said such criminal action will not be tolerated but confronted, and all those involved in the smuggling network will be brought to book. SARS has the mandate to combat illicit trade of such activity and unfair competition for the local industry. Then lastly, let's spare a thought for those little yellow bath toys, the rubber duck. About 25 years ago, a cargo ship traveling from Hong Kong to the United States accidentally lost a shipping crate in the Pacific Ocean. Inside that crate were 28,000 rubber ducks unwittingly about to embark on many long journeys across the globe. As rubber ducks continue to pop up on shores from Australia to Alaska, they've enlightened our understanding of ocean currents. Some have made it all the way to the Atlantic Ocean, while others have been found frozen in the Arctic. So with that, enjoy your Friday further. Thank you very much, Francois. Back to you.
It's amazing, David. Thank you so much. And thanks again to the Financial Planning Institute for sponsoring the news and you know, bringing this to us every single week. It's extremely value adding. So thank you so much. We deeply appreciate it. And do you want to say maybe a few words about the upcoming conference as well, the convention?
Yes, thank you, Francois, for that opportunity. So the FPI annual convention, where the theme is entitled "The Future is Human," is taking place on the 25th and 26th of October. Unfortunately, we were planning a hybrid event with both live and virtual, but due to COVID restrictions and the environment right now, we've made the decision to place it as a fully virtual event. So we'll still be streaming it live from the venue with the speakers. But yeah, get your tickets now and book for it. We've got fantastic speakers looking everything from technology to the psychology of money and everything in between to help us as financial planners better ourselves and make sure that we still stay relevant in a future where technology is going to help us deliver financial planning, not replace us. So thank you for that opportunity, Francois.
Amazing. Thank you, David. Have a fantastic weekend. We'll see you or someone from the FPI back next week.
Brilliant. Thank you very much. Enjoy the rest of the show, everyone.
Thanks. Bye. All right. So then it's time to head on over to Norma and to hear what she has to say and what people think. So looking forward to this one. Norma, over to you.
Good morning. My topic for today is what other people think. So I think we spend a considerable amount of time thinking what other people think. And if it happens consciously or subconsciously, it happens. And the reason I know that is because it really shows up in our lives. And it shows up in us maybe not wanting to express our opinion for fear of the other person maybe not liking us. It might be that we're trying to people please. It might be that we don't even pursue our goals because we have fear that we might fail and what others might think of it. And we also try to change and in sort of attempt to fit into a conversation. So let's look at just thinking for a moment. So our thinking really creates how we feel, and that drives the actions that we take. So the circumstances or events that happen in the world really triggers our thinking. So if our thinking is based on really our past experiences, how we were socialized, how we maybe were conditioned, our beliefs and our values. So to give you an example of that, to illustrate it, is that if an event happens in the world and there's 10 people that experience that event, that those 10 people would all have a different story about this event. So you can see that it's not really the circumstances that determine how, or the actions that we take or what we think. It is based on our past and our conditioning and all of those things I just mentioned. So what then really happens if we try to control what other people think? It is that we fail 100% of the time, because if we need to change based on what we think other people want us to be, then that's something that we can't control and something that we will never be able to reach. So people's thinking change on a daily basis, a weekly basis, and also we don't know where they're coming from, so we can't even imagine what they are thinking. So why do we even care what people think? From prehistoric times, people wanted to be in groups, and purely for the fact that that was safe, because that then we can protect ourselves from predators, and we can maybe pool our resources, and we even share our workload. And if you were rejected from that group or that tribe, then it was not safe for you. Your survival was at risk. You maybe could have starved of hunger or maybe eaten by a tiger or something. So today we are still very worried about being rejected and maybe not belonging. And just the reason for that is that we are still human and we have human needs. And one of those, or a couple of those needs, are that we want to be significant. We want to feel that we matter, that we belong. We want love and we want connection. We want to contribute to something bigger than ourselves, and we still want to grow. So on the one hand, we don't want to be totally isolated, and on the other hand, we also don't want to be overly, consumed with what other people think of us. So, sort of, what can we do to find a place where we get this connection with others, but that we still see ourselves? So, I've just come up with a couple of things. So, the one is that we need to get to know ourselves. That we need to be confident in who we are and what we want and where we're going to. So if our thinking is aligned with what we say and what we do, then we actually live in integrity. So then we know sort of where our North Star is, and it's easy for us to make decisions and to be in conversations and to express our views. So we need to know that others are on their journey and we've also got our journey, and that we all belong and that we all are equally worthy as humans. Another one is to grow, that we are growing and learning and other people are also growing and learning. And if we get feedback or comment from people, we need to know that it's their point of view. It comes through their filters and their beliefs, and that's and it's where they are in their life. Another one is that we have opinions and other people have opinions, and that opinions are not facts. So there are a lot of reports out there where people sort of have opinions and we take it as facts. So we need to know when to listen to ourselves, and we need to know when we need to see ourselves first as well. Another interesting one is that we can be open to be wrong. So this doesn't mean that we are less as a person, or our values or what we say is less valuable. It just simply means that we're open to new perspectives and we can be the student. So if we're curious about people, we can ask them questions, and then we might be less judging them and maybe accepting what is. And then lastly, just to validate ourselves. So instead of looking for external validation, and if we get external validation, we want more of it to have the same effect. So we can validate ourselves and we can give ourselves validation when and where we want. So let me leave you with this. So the next time that you feel you want to people please, or that you want to say something that you think other people want to hear, then you can make up a story that actually serves you, because we're going to make up stories anyway. So the story can be something like, I'm a person that gives this person valuable input, and that this input is honest and it's authentic and it's what's really true for me in the moment. That's what I have for you today. Thank you.
Thank you very much, Norma. Hope you have a fantastic weekend, and we'll see you back next week.
Great. Thank you, and goodbye to everyone.
Thanks. Bye-bye. All right. So before I introduce Bjorn and I'm looking forward to this conversation. This is, I think, a conversation that's been had a little bit here and there. And definitely I've been to some events at the FBI and at different places where there have been discussion around this. But I'm really excited. It's the first time we're going to talk about this on the show. So really excited to get all into life annuities and the innovation around that, and to clarify a few things, because there's all these buzzwords also being thrown around, and we think they mean the same thing and they don't necessarily do. But before I do, I'm looking for ideas for new segments. So if we're looking at, like, we have the news and the personal development, I'm looking for another segment that we can rotate. So I'm looking for ideas for segments. So what 5-minute segment can we have where either I talk about something very specific in that segment, or we have somebody that presents that segment like we have for personal development and the news. So send me some ideas. You can put it in the comments, whether you're on LinkedIn, Facebook, or on YouTube. In the chat, you can put it there. I can go and find it afterwards. But if you have any ideas for what would be valuable, where we can just do that 5-minute segment, please let me know. It'll help me a great deal. Then also we did the recordings for the Financial Planning Summit, which is hosted by the Collaborative Exchange. We did that on Monday and Tuesday. So those things are done. It airs on the 22nd and 23rd of September is when that happens. So be on the lookout for that. If you haven't registered yet, you can register your place. So you're more than welcome to do that. Then also, just quickly, we are going to launch on PROpulsion Pro, exclusively to PROpulsion Pro members, a PCE challenge. So that's for anyone that is doing the PCE or attempting the PCE or the board exam for their CFP certification. And we are going to run that from November or so. So if you want to prepare well, if you want to make sure that you are ready for this exam, then please be on the lookout for that. It's not yet open to join, but I just wanted to sort of mention this already. And we're almost ready to launch that. So if you know anyone that is going to attempt their board exam, they want support, they want to be part of a community, they want to study together with other people also preparing for the same exam, then let them know. Consider becoming PROpulsion Pro members because you'll get access to that challenge. And then lastly, also on Wednesday, the 22nd of September, we have a 30-minute open session. I don't want to call it a webinar, but Adam, Owen and myself, we're going to talk about how to study less and pass more. And this is going to take place on the 22nd. So that will also go out on Monday. But just for now, please know about that. All right, so enough with the announcements. And with that, I am very excited to introduce Bjorn. But before we do, let's do the intro. There you go. Good morning, Bjorn. I see you muted yourself, so just unmute yourself on your side. I can't. So warm welcome and a good morning to you, Bjorn.
Good morning, Francois, and thank you. Thanks for having me, and congrats. 150 episodes. That's fantastic. Well done.
Yeah, thank you so much. I'm just very happy I'm not 150 years old today. That would have been catastrophic, I think. But thank you so much. And what a way to celebrate this. I think this is a topic that there's a lot of interest in, number one. And number two, it's something that doesn't get talked about enough. And I know you are extremely passionate about this. So there's no one better to join us today to talk about this. But on that note, Bjorn, just a brief background on yourself, just you know, maybe a little bit on your experience and just where you're from and what you do on a daily basis, and then we can get into the conversation.
Okay, great, thanks. So my name is Bjorn. I'm an actuary by trade, and for my sins, I've worked across the world, dealt with a lot of annuities in different countries, and I guess that's what over time just sparked the passion for me. And yeah, thanks for giving me the opportunity. I think colleagues and friends will be glad that I'll be getting it off my chest early on a Friday, so I don't have to talk to them about it the rest of the day. So looking forward to it, but that's me.
Awesome stuff, Bjorn. No, I mean, let's get started. Obviously, there's been a large focus on living annuities for a very long time, and this is not about bashing living annuities or anything. I think what we need to know and understand is what the risks are that a person in retirement or a person going into retirement or a person close to retirement is facing, you know, and I think that is what we need to consider before we can decide, like, sort of what, you know, how do we put a solution together for them from an income perspective. So what are some of the main risks that retirees face?
Yeah, thanks. And it is very important. And I always say that if you think about it, it's probably one of the biggest single financial decisions you'll make in your life. Obviously, there are many decisions, but you know, it's like a single spot in your life where you have to then make those choices. And because of that, it's worthwhile just thinking through the risks. There are really three main risks if you distill it down to that. The first one is longevity risk. So the risk of living to 150, like you said, the inflation risk, which is really that your cost inflation is just higher than anticipated. And then finally, investment risk, which has a different flavor for retirement, because that's the only time in life when you predominantly, we call it decumulate, so you withdraw money. And there, especially the timing and extent of crashes affect your outcome. And the risk here is that it's just doesn't turn out as expected, and specifically put, as good as you expected it to be.
Yeah, and it's also that thing about, I think you're referring to the sequence of returns risk, where Absolutely. You go into retirement, and as you go into retirement, the market starts going down. You know, if you go into retirement at a time where the market is low and actually going into a growth phase, fantastic. You're going to have a good ride probably. But if you go in and the markets are in a downturn, it actually has a massive impact. Even, and I don't know who of you have seen that study, but I mean, if you look at, like, normally we would illustrate, let's say that I'm just going to use 10% for ease of reference, but let's say your investment return is 10% per annum, and that's on average. I mean, that's a straight line, 10%. It doesn't take into account that this year you do minus 10, plus 20, and overall you average out. So even where somebody gets a 10% on average return, a person that got that in a growth market when they went in is going to be better off than a person who got that in a market that was declining at the time when they went into retirement. And that is a fascinating sort of study. And something that if you haven't looked at it before, then I definitely want to encourage you to do that. Before I move on, Bjorn, is there anything that you want to add on to that?
No, and I have to speak to sequencing risk, and you're right. It's something I must say that I underestimated, you know, earlier career. I guess because I was so focused on annuities, didn't look at living annuities so much, and it is especially there, and like you say, there's a good place for all of those products. We're not here to favor the one above the other, but it's especially when you draw down, I guess, when the markets are low, that it truly hurts. Maybe that's the way to put it. But for me, it only really twigged when you actually work through a bit of an example. So it is real. It sounds complicated, but it's actually not that complicated. But it is something that you need to consider, especially, like I say, in your decumulation phase.
Yeah. Bjorn, so in South Africa specifically, I mean, you mentioned earlier that you worked all over the world, specifically with annuities. So you've seen what happens in different places. You know, if we look at the annuity market in South Africa, and just to be clear, if we refer to annuity, we just say the word annuity, we're referring to life annuity, fixed interest annuity, traditional, whatever you want to call it. But it's not a living annuity. It's the other one. Okay. So just to be clear. And so the annuity market, I mean, how do you define these annuities in South Africa, and where are we at the moment?
Okay, so and let's talk about the elephant in the room. Let's first just cover what are guaranteed life annuities, and I think it's always worthwhile to intro with that, because in South Africa we have three types that you hear about a lot, and the one is actually retirement annuity, which is probably a bit of a misnomer. Maybe they decided to call it that because you're saving up for your retirement when you buy an annuity. But certainly that's not what's meant with an annuity, is the savings phase. An annuity is really just a financial product that provides an income stream that's guaranteed to be paid for life. So in other words, it's like thinking about a paycheck for the rest of your life. It's just that you're guaranteed not to get fired. And I've also heard people saying, calling it a play check for the rest of your life, because that's what it should be. And yeah, so that's the guaranteed life annuity. And then the other choice at retirement you have in South Africa is to go into a living annuity. Sorry, and the living annuity is really, it's almost like an investment account where you then make drawdowns. There are regulatory limits. It must be minimum 2.5, maximum 17.5%. And that really offers great flexibility and capital upon death. You know, if you die and there's something left in that investment account, but it doesn't guarantee or secure that lifetime income. And those are really the two main choices. And we'll talk a bit later probably about some new choices that have come out of the works.
Yeah. So, I mean, in general, like what is I would assume that that living annuities is the more typical choice at retirement. You know, is that what you find from research and that as well, that is still what's happening, or have you seen an increase in the choice between life annuity, that more advisors and clients are choosing life annuities, whether in conjunction with or in addition to or on its own, versus living annuities?
Yeah, and maybe if you can show that picture, it's one slide for us, just to talk through this, and just to be clear, this is just our own estimates of how it's developed and undeveloped over time. But I think it does help to paint a little bit of the picture, and going back and maybe showing my age here a bit, but as you may know, defined benefit schemes used to be very popular. They're still around. There are still some of them, and that's that blue zone. And you can see it's the 90s, and then they started going down. Guaranteed annuities right at the top have always been there. And in fact, they've been around for, I think, since Roman times. And that's maybe why we forget about them, because they're deemed to be old and unsexy. And then, importantly, for a given need, living annuities were introduced in the mid-90s, and that's that grey zone there in the middle. And I spoke about these two choices at retirement, and apart from being in a defined benefit scheme where you then get your pension when you retire, if you were in a retirement annuity fund or a provident or other funds, you have these two choices, essentially between that pink and the grey. And as you can see, living annuities, and the last stats we got from Masisa on that, 90% of monies at retirement went into living annuities. And absolutely has its place, but we are concerned that there are many people that are not securing their income and either drawing down too much or even ironically underutilizing what they can spend, because they're being so safe and so protective of their assets. And then we put in a green sliver in there too, and we'll talk a bit about that later, but that's a new product that's come out, which we call a blended living annuity. There are also hybrids out there, and that's really the combination of the two. We've slotted in nicely also between those two, and it really just takes the best of both of those products and combines it.
It seems to be like sort of the option that obviously reduced the money that went into living for obvious reasons, and increased the sort of, and it's always sort of creating that best of both approach. I would assume that does make a difference, and where people feel, okay, so this sound, I'm not putting everything there. It's sort of a split. So from that, so let's talk a little bit about hybrid and blended annuities. Is hybrid and blended, is it the same thing?
Yeah, so and let me start by saying what I said just now, that both are a combination of those two products, and they both welcome additions to the landscape in South Africa. But where they differ is that so they both have a guaranteed life annuity part in it, and so what I have on screen here is the blended living annuity, where the guaranteed lifetime income sits inside the living annuity. And maybe that fits in well with your comment about it looks like, this has taken some of the living annuity share away. And it's really because it in a way it doesn't. You're still investing in the living annuity. It's just you secure, you have that guaranteed paycheck, the green part that you have, which then that pays a very useful income into your living annuity. And then from there, as per usual, you can flexibly draw down between 2.5% and 17.5%. And we put a bit of a dial there on the side just to show that, you can freely dial this up or down. You can't undial the part that's in green. And that's basically just because a life annuity is a risk pool where it's a buy and hold investment. Once you're in, for the greater good of the pool, you must stay in. Otherwise, I think the converse would apply. Just before you die, you would actually pull out of the pool. And that's the blended living annuity. A hybrid typically are where these two are side by side. So they still have absolutely those best of both, those combined benefits, but they are either two separate or they're combined in a different way, but it's not the life annuity inside the living annuity.
And which of these, do you find, do they work the same? Is there a benefit to go blended over hybrid? Is it personal choice? Sort of, how does one make that decision? Or is it just depending on the provider you use, or
And let's start with the provider. There have been different, let's call it, styles or approaches of how they've implemented it. So some of it is driven by a provider. We certainly prefer the blended approach, and the reason for that is you maintain that concept that you've got one living annuity that you invested in with fees and things applied to the entire piece. And then the other reason is that over time you can continually put more and more into the green, into the lifetime income, if that's what you need. If you don't, you can just keep it like that, with the comfort to know that green block gives you that nice, secure income that we sometimes call a safety net.
So if you say you can put more into the green part when it's a blended annuity, does it mean you can literally, do you move money from the living to the life annuity, or can you just deposit almost more money into the life annuity, new money, and not just move it from living to life?
And maybe so in a way it works just like any other unit trust or asset you would have in your living annuity. We call it blending too. You do your blending exercise, and you see on the balance of needs between income and capital, this is how much I think I should blend. But then over time, if you feel I want to actually secure more lifetime income, you can just buy, we call it tranches, but essentially you go and invest more into the green part. So you add more tranches. And of course, the older you get, those tranches will attract what we call higher annuity rates, as your life expectancies shrink. And then maybe just to be clear, the rest of your living annuity, or it can be your absolute normal unit trust. You can have a combination of balance, money market, whatever other style assets you prefer there. There is an argument to say, but wait, because you've got the secure lifetime income, you can actually go a bit more risky on the rest. But that's how it works.
Yeah. Okay. But I just still want to be clear. Can I put new money that I have let's say I have a new retirement annuity that comes to maturity, or I want to retire from it now. Can I put that into that green part in a blended annuity?
Okay.
Can I do that?
Okay, good question. So we currently, and this is just us, and like I said, it varies across different providers, but currently this setup is available at 5 asset managers, the likes of Allen Gray, Alexander Forbes, Signia, PPS, and Citadel, where if you have a living annuity with them, so you first essentially transfer your retirement monies into a living annuity, and then you go and purchase this lifetime income. We call it just lifetime income, or Julie for short, and you then go purchase this fund from within there. So that's how it works. Good question.
Okay, yeah, cool. So 100%. Then if we look at different retirement income philosophies, I mean, are there different philosophies out there? Are there different approaches to this? You know, I don't know. Is there a case to be made that one philosophy is better than another? Talk to me a little bit about the different retirement income philosophies. And particularly, I'm also keen to understand if this is a South African thing, or is this a worldwide thing, or is it particular to each and every country almost, or each sector or area?
And now you're getting into an area that I'm starting to enjoy more and more, just because it's such a daunting decision to make, and there's so many options out there. I think they're quite varied opinions on this. But there's a guy called Wade Pfau, and for me, he unpacks that in quite a nice structured way. And he says, well, if you look at the retirement income philosophies, you get a range typically of what those philosophies are. There are many, but they basically range from, on the one end, what he calls probability-based, and that's where people would say my retirement income needs are best met using a diversified investment strategy. And maybe to make it tangible, that's almost like going 100% into a living annuity. So that's the probability-based way of approaching things. And then the other side of the spectrum is what he calls safety first. And I mentioned the safety net just now, but that's really where your retirement income needs are believed to be best met using risk pooling mechanisms, and an annuity is the obvious thing there. So those two, probability based to safety first, and in a way, so I already said living annuities fit quite well with this probability based approach, where you would then may say, well, let's have a safe drawdown rate, let's invest appropriately, and the advisor can continually look at the needs and see if it's changed. And then the other extreme is the safety first, where you maybe go fully into a guaranteed life annuity. But what's exciting nowadays is that because of this blended living annuity approach, you can decide where between those two you actually want to be, how much you want to dial it between safety first and probability based.
Yeah, cool. And then, you know, in terms of new innovations, I mean, like, you know, what's the most recent things? Are there things that, I don't know if one can talk about this, but whether there's things that are being looked into and researched and that may come our way, I don't know. I know these things are sometimes very, very secretive, but I don't know. I mean, what are you seeing? Are there certain trends? Are there things happening overseas that we would want to bring to South Africa maybe? You know, how do we, because it feels like, you know, because I've done some of these sessions at employers for the members of the pension fund or provident fund, whatever they have there. And you talk to people who are within 5 years from retirement and you give them their options, and it feels so limited, you know, even not even just from a financial planning point of view, but there's quite significant impacts of the options we have on how much money you should actually be saving. If you start doing the calculations, you know, it's actually crazy. And it's just like, I'm keen to learn, are there any like new innovations, even just the, you know, the blended stuff obviously is one of that, but are there maybe other things coming as well? So keen to hear if they're, you know, on the latest innovations around this.
Okay, sure. And it is the topic for today. So, and we have covered quite a lot already regarding that. But absolutely, there's a lot happening. Well, you could argue because it's such old and time-tested products, what are we doing to make it sexy again? And that's what's happening. So let me mention a few things that has happened in the last few years, and it's probably the last decade or so. The one is called, and maybe people are familiar with this. We call it a with-profit annuity, but let me explain it quickly. What that really does, it's an annuity, and I always say with an annuity there, it's important to know that it's paid for life. And then the other thing to know is, or understand, is what will my increases be in income? As you can imagine, that's key. And in South Africa especially, we have the predicament that if you were to guarantee inflationary increases, it's actually quite expensive. In fact, that's a big barrier. So most people cannot afford it. With-profit annuities were developed to give you increases that target inflation. And how that works is it actually, the increases are actually driven by being linked to an underlying investment portfolio. So a normal unit trust style portfolio. And that's then also quite nice from a flexibility point of view, a choice. So we're bringing choice back into the phrase. So someone can have a with-profit annuity and choose to link the increases and how it's being calculated to a range of portfolios. So that's just, I think, just bringing the menu back on the table, where previously maybe you got a menu with two desserts. Now we're giving you more. We must, of course, be careful that you don't overwhelm the client, but that's where the advisors also just play a massive role. And unfortunately or fortunately, this is absolutely an advised product. So that's with-profit annuities. And the other one, maybe just to touch on quickly, is underwritten annuities. So what we mean with that is, and this is a product that started quite a while back in the UK, actually. Off the back of a client saying, but wait, I bought life insurance now, and you rated me because I've got a condition, so you loaded my premium, so I'm paying more. Now I get to retirement, I get an annuity, but it's the normal price you're giving me, or the normal income. What's going on here? And that then drove a whole market, and since then you get it in South Africa too, where people are medically underwritten at retirement. And where that really is a lot fairer for clients is for those where they have conditions, or so either health or lifestyle and even socioeconomic factors would lead them to having shorter life expectancies. It's only fair that you give them a higher annuity, which we call annuity uplifts. And those are just two examples. So with-profit annuities, underwritten annuities, and then we spoke about blended annuities already.
Yeah, it's sort of I always see the funny side in most things. So you go for this underwritten because it's better for you. If you're worse off, you'll get a better income, right? But it is confirming that, but you're not going to live that long. So it's sort of what do you want now? Like higher income or this confirmation? Like you have to choose what you can handle, I guess.
I guess it's hedging your bets. It's like,
Yes.
well, if you get the bad news, at least the good news is you're going to get a higher income at least. I guess it's like going into a rugby game, and when you're betting on the side, you bet against what you hope would happen, so that if your team wins, you're emotionally happy. Maybe you don't win the bet, yes. But at least that if they lose the game, then you know you're going to make some money off the financial bet. So.
Absolutely. Just like as soon as you got your annuity, back to the gym. There you go. So let's turn this around, because it can be done. So that would be in your best interest. I want to ask you sort of a different question on the back of this is, how difficult is it? Because a lot of this is legislation based. There's a lot of legislation that regulates how these products work and what you can and can't do, from a tax perspective. So I think there's many different sort of regulatory / legislation that needs to be considered, or that need to be introduced, or that need to be changed and updated. So are those, I mean, what are some of the things that makes it difficult for us to be, or for you guys really to really be innovative around how we provide income? Or are these the only options? Like, I mean, as an actuary, would you go like, this is the options? Or is it just because of how it works that it's difficult to introduce new ways of doing things?
And let's talk about that. So regulations, and this is again across the world, they have its place, and it's very important. What we have found is, and in fact, the blended living annuity was in a way and something we had to work hard on to try and level some of that playing field. And let me just explain what I mean there. You saw that such a big part of the market, or people at retirement, have been going into living annuities, and some of it was also driven by the fact that take commission as an example. On normal guaranteed life annuities, you can only charge an upfront commission, whereas on living annuities, for the ongoing work that the advisor does, you can charge an ongoing advice fee. And that already presented a challenge, but something like the blended living annuity overcomes that. And it wasn't easy, but I think the message is, think what your client needs are, and you will be able to find a solution. And if the spirit is right, I mean, like here, the spirit is absolutely right. We're securing a income for life for those clients. The regulator will support, you know. So and that is what our experience has been as well. So don't be put back by it. But then practically, Francois, new products are, you know, as you can imagine, it takes a while to think through and do. And I would also just warn against having too many options as well. So I guess that's where as an industry, we must find that balance between giving choice, but not also making it too complex or too varied that you have 10,000 flavors of frozen yogurt for dessert. Yeah, I think that will also make it even more difficult. So I guess it's back to thinking through what are the needs and how do we meet it in the best way.
Yeah. I mean, what does the future hold? Like, is there anything in particular, or like, have we covered everything? Is there anything that you would like to add on? Like, where is this going? Or maybe how can we, as a financial planning community, sort of look at this differently going forward, and use all of these strategies and these amazing new products and different ways of doing things in the plans that we put together for clients?
And I think the future is bright for annuities. And I'll get back to that now. Some things that I do see happening more and more, I think, on the technology side, and I'm talking about planning tools and help, ways in which you can get help. I think that will definitely develop more and more over time. But we do live in challenging yet exciting times. And that, I think, will continue to drive high demand for guaranteed life annuities and these new blended or hybrid annuities. And the reason for that is that it just gives you that security, that peace of mind in a time when you really need it, which is in retirement. So I think, you know, watch this space. The exciting times are ahead. And yeah, don't forget about annuities.
Yeah, very important. Bjorn, yeah, so that's sort of that. Where can people learn more about this, or maybe get in touch with you, and like just if they need more information, or, you know, what are some of the details where people can get hold of you, or just?
Yeah, so and our website is www.justsa.coza. You can also just drop, I think I'll be connected on via LinkedIn. So either myself, Bjorn, or I see Yaku also, he posted a message there. Just connect with us. On the website, there are nice articles to read, things that we've over the years have posted. We've got two short videos that explain to you as well what an annuity is and what blended living annuities is. So they're quite a lot of there. But I think the main thing is reach out to us and chat to us if you have questions.
Yeah. Cool stuff. I've also put the links down on the YouTube, in the YouTube description, not on Facebook and not on LinkedIn, but on the YouTube one, we've got all the links down below for Bjorn's LinkedIn as well as the Just SA website. Bjorn, any last words from you before I say goodbye? And thank you. Anything else you would just want to say in closing?
No, thanks. Thanks, Francois. It was good to chat. Like I say, we're passionate about annuities, and we hope that through that we can just secure a better lifetime for our clients in retirement. So looking forward to engaging with you guys.
Great stuff. Bjorn, from my side and on behalf of the community, thank you so much for your time. And well done on the great work that you and the team are doing as well, and the options that have come to South Africa since you started here. So thank you so very much. We deeply appreciate it. Thanks for all the insights. And I wish you and the Just team all the best. And hopefully we can run into each other somewhere at a conference or a coffee shop or something somewhere. I do come to Cape Town sometimes, so we never know.
Awesome.
But great stuff. So thank you, and have a fantastic weekend.
Thanks, Francois.
Cool stuff. All right, ladies and gentlemen, that is it for today. I really appreciate it. I haven't seen any comments on the ideas for the segment, so please send me some ideas. You can WhatsApp me or you can put it in the chat below. I'll really appreciate it. Just some segments that we can do that will offer value to you. And on that note, thank you very much. Have a fantastic weekend. A huge thank you for 150. And as we say that, before I let you go, just remember to always raise the bar. I'll see you next time. Bye-bye.